Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, November 12th, 2010. Well, folks, a monster sell-off today on the back of a surprise news point out of China. Again, the scared money in China running for cover last night as the Shanghai Composite dropped 5% and more. Again, why is this affecting the U.S. markets? Because, again, anytime you have any index, global index, especially a rising power like China, drop 5%, that's near a crash. I mean, we're talking about not just a small 1% decline or a 2% decline. We're talking over 5% as, again, speculation has it that China will be raising interest rates much, much more to combat the massive surge in the economy over the last few quarters there, all right? And, again, that's negative for the rest of the world. Any way you cut it, if China's going to start to slow down, which, again, raising interest rates would do, that would create a massive slowdown in the rest of the global economy. And I think that's the fear right now. That has the dollar starting to uptick off the lows and actually turning to the positive side. The markets have collapsed. Initially, the Federal Reserve, which is a POMO day, it had a POMO day today, attempted to prop the market up. You can see early in the day a small gap down and a push to the upside, almost back to the flat line here. It just did not work. Why? Because there's a little too much volume here. Again, too much sell pressure, too many sellers in this market, and that's, again, slamming the markets to the downside. Now, we are at some major support levels I will go over shortly. We'll cover all the bases here. But again, the key about today, folks, is the turn cycle my partner, Chief Market Strategist Nick Santiago, gave out, which was, again, for Monday, Tuesday of this week, worked out perfectly. And we are seeing the downside momentum come in. It's amazing because over the last 2 months, we've seen a market that's basically gone up every single day. I don't think we had 2 down days in a row in 2.5 months, let alone more than, a 50-point drop on the Dow on a down day. All of a sudden, if we zoom out on the charts, and let me show you this, folks, take a look at this. This is last Friday. This is Monday, and this is Tuesday. This is your turn date top pivot that we called over a week ago. And again, notice how it takes out that pivot high, takes out stops of amateurs. And again, as soon as it takes out those stops and the institutions accumulate those shorts right there, look at the market, how much it has fallen. Again, beautiful call right there. Turn pivot level right again early in the week. And again, nice move to the downside. Shorts again playing out beautifully. We've taken some profits on Las Vegas Sands this week. There's been some great intraday scalping opportunities. Let me just tell you, folks, it is good to have volatility back in the market for the chat room because, again, the money's just rolling in. The levels working beautifully. Take a look at the levels right here. Again, we'll go over those shortly here. But, again, these are the keys that you want to be following. So, again, turn date nailed. Market to the downside again. Beautiful action here. And, again, let's zoom in on the charts just into the last couple days and go over the key levels. First off, take a look at the initial gap down today. The initial gap down takes you to this 120.70 level, which happens to be a double bottom from yesterday. Also, if you zoom out a little bit more, a double bottom from the day before. So this was actually a third gap down, which is called a triple bottom. And again, sure enough, I said to the chat room, guys, this can be a positive play. You can look at this as a buy right here for a short-term scalp to the upside. So again, going long right here at the blue line, perfect. Market surges up, we go right up here to this pinkish line. That's going to be resistance. You can take a short right up there. If you take a short right up there, it goes above, never confirms above, reverses to the downside. You come right back down here. Now, let me ask you this question. For those of you that know the methodology of in-the-money stocks, would you dare take another long play right at this blue line? The answer is absolutely not. Why? Because there's too little time between these candles about when they've hit the bottom here. In addition, it's technically the second hit of this double, triple bottom area. And again, you should know by the methodology. And this is all stuff you learn in the Research Center, folks. If you don't know it, then just join the Research Center at InTheMoneyStocks.com. You get everything included underneath that Research Center. It's a no-brainer, really, to be honest. But in any case, you would know not to buy that. And again, it flushes right through just as expected, all the way down to a little pivot point right here, which again is a 60-minute gap fill. You get a bounce. Nick called that out when he was on the mic in the chat room at that point. And again, it was a beautiful long scalp coming right back up underneath the blue line. Blue line's going to work as resistance because you confirm to the downside below the blue line. Beautiful move to the upside. Now, again, for some of you out there that may be new to this, it may seem like I'm talking a different language. Join the Research Center. You will know exactly what I'm talking about within a few days. I promise you that. All right? There again, coming up to the blue line, market falls right back down. You come down to this little area. You get below it. You consolidate and come down to this yellow line. You want to see where these yellow and green lines are? Take a look at this, folks. This is crazy stuff right here. Just so happens to be this pivot high. Look at the yellow line. Yellow line is the pivot high going back to the first, then the pivot high here on the second right here, the third right there. See this pivot high yellow line? Look at where the market's getting a bounce now. All right, and again, gap fill right there. You pierce gap fill, go right to that level, and again, get a little bit of a bounce right there. Beautiful levels on the chart, continuing to work today. Understand trend line analysis, and you will be a top-notch trader. And I want to say this one thing. Many of you out there may be swing traders and not necessarily day traders. Doesn't matter. As I explained to my premium members in the Research Center, which is more geared towards swing traders and longer-term investors, all these rules that I talk about apply on all time frames. It doesn't matter. It does not matter, folks. It applies on all time frames. If you're a long-term investor, use the same principles. If you're a swing trader, same principles. Day trader, use the same principles. It works on all time frames. Now, the other thing I want to just talk about here, yesterday in the nightly videos for my premium members, I said a couple things. One was, if there's no news and the market is quiet, what are you going to see today? You would have seen a flat to positive day because POMO would have taken over on light volume. The Fed, again, POMO was infusing money into the economy or into the markets by buying treasuries from the banks. That's if you didn't have a shoe to drop. And what I made clear last night in the nightly video to my premium members, if you ever get a shoe to drop, for instance, 5% down on the Shanghai, which is a major collapse, then you better look for downside momentum because there are a lot of traders out there. There's a lot of institutions that are very nervous seeing how toppy the markets are here. And sure enough, you get that shoe to drop last night by the Shanghai index dropping. And again, you can see it playing out beautifully here. Now, again, are we down as much as we could be? No. I think the volume overall, even though, again, the volume is decent today, it's not exactly huge. I mean, we've done 138.5 million on the SPY. I would like to see over 200 million. And again, I think if we saw that, the markets would be down even more here. But it's still a nice fall. You can't deny the fall here today. Again, Dow, let me just get a quote on the Dow. Dow down about 132, and S&P down about 17, and NASDAQ's down about 41. So again, we're down 1.25%, 1.5% across the board on these indexes, which is a very good fall. All right, what are some of the shorts that we have in the Research Center? LVS, take a look right here, down $2.28. Again, the short level was $52.02, and it's now near 48. That's $4 almost in the money. We've already taken half off the table just to be safe, and again, these are just examples of things that are live in the Research Center. GLD is short, down $4 today. Take a look at that drop today, folks. GLD down $4. And again, Apple Computer, also a little bit of a short play here. Again, it's getting a small bounce. Was down to 303 and change. It's back to 308. It was down $13. It's now down $8. And again, join the Research Center to get this information. Again, putting out trade alerts pretty much every day. One of the trade alerts that I just put out, I think it was yesterday or the day before, was an ExxonMobil alert on the daily level. And I'll give this one to you guys because it's already playing out. And my members, anyone who took this trade is already in the money beautifully. You had a major gap window, gap fill area right here. I basically said anywhere between the 71.25, 71.30 level and this level up here at 72.20 would be a short level. It gets right in between there. Look at the drop. All right, again, you just have to follow the charts, understand the cycle date, put the keys together. It's like a puzzle. Put the pieces together, you're going to make money that way. You're going to raise your odds of being a successful trader or investor probably in the range of 90% or so. So 90% winners, 80% winners, somewhere up in that range. That's what you have to do. All right, let's go over a couple other keys. So again, the market again is getting pounded. By the way, I think the market may have bottomed for the day right here, and the reason why, if you go to your futures chart, I don't have the overnight data to show you guys on this chart per se, but if you go to your futures chart on the S&P, on the ES futures, you will see that we just hit the double bottom from 3 a.m. in the morning. 3 a.m. Eastern time is when the futures hit a low of down about 17.5 to 18 points, and we just hit that low right here at this exact level right here, which also happens to be a key level on the SPY. So again, understand that oftentimes you'll retrace down to that low level on the futures chart from an overnight or even the high level on the futures overnight data during the market hours, and then often that'll work as good support or resistance. In this case, very good support. Doesn't say necessarily we will remain here, but it gives us a little bit of a positive play. Plus, you can go on a long scalp here. Plus, you have a trend line. There's a lot of good things here that we can see here and are working out beautifully. So a little bit of a bounce coming in here. Apple's getting a bounce. We're seeing a lot of little bounces. Chevron's getting pounded down $1.40. Exxon's down $1.25. Believe it or not, financials are not getting hit that hard. Goldman Sachs down 19 cents. JP Morgan down 48 cents. Not that big of a drop there on those stocks, all right? Now, a couple other things to go over here quickly. The dollar is just falling back down. Notice how the dollar's gone up all day. Where's the market going? The market's gone down all day. So you can see the inverse relationship continuing to hold. So as the dollar's been going up all day here, the market's been crashing down. Now, all of a sudden, the dollar's pulling back. What did we just see on the spiders? The spiders were getting a bounce. So the inverse relationship continues to hold beautifully here with the dollar inverse to the markets. All right, let's take a look again. Gold, we talked about gold getting pounded today. The GLD down $4.40. USO is also getting hit down $1.21. Big fall on that. And again, it's all about this shoe. If everything remains calm and quiet, the markets will remain neutral to positive because the Federal Reserve will be in there creating that asset bubble that they've been doing nonstop. If, however, you get a shoe to drop, like we did last night with the Shanghai, then watch out below. This market, again, is a very toppy kind of index. All right, this overall market definitely toppy. All right, folks, again, good stuff. Going to be good trade stuff. The chat room's bubbling up with lots of fun calls here as we're getting more volatility. Again, it's always fun to get. The Research Center, again, education, swing trades, market analysis on gold, oil, and the dollar. You name it, it's in there for you. Join the Research Center at inthemoneystocks.com. Be ready. Next week's going to be a good week. Take care.